I'm Reagan the Bull. Today we're going to drop into where this US stock history began. So my question is, have you ever wondered how the US stock market began? Let's dive into the fascinating history. The US stock market traces back to the late 18th century. The first stock exchange originated in Philadelphia in 1790. It was a marketplace for trading government bonds. Fast forward to 1817, the New York Stock Exchange Board was created. Traders began formalizing stock trading rules. Soon after, in 1867, it officially became the New York Stock Exchange, NYSE. Key events shaped the stock market over decades. In 1929, the crash ignited the Great Depression. In response, reforms to introduce a protector, the market saw significant growth post-World War II. Industries boomed and new companies emerged. Technology brought changes in the 1980s, introducing rapid trading techniques. Today, the market operates 24 hours through a digital platform. But what drives stock prices? It's a combination of supply, demand, and economic factor. For example, when a company releases positive news, stock demand typically rises. And then negative news can also lead to a downfall in stock price. In summary, the US stock market evolved from a simple exchange to a complex system. Understanding its history helps investors navigate the present market. Curious to learn more about investing and stock markets and how to use it? Subscribe, hit that notification button, or just comment below. So, the early days of the stock market were characterized by a lack of regulation and transparency, which often left investors vulnerable to manipulation and fraud. As the market progressed, notable figures emerged to advocate stricter rules and greater accountability. This push reform laid back foundation for many of the regulatory bodies we recognize today, including the Securities and Exchange Commission established in 1934. The evolution of these regulations not only aimed to protect individual investors, but also instill confidence in the broader financial system. Thus, the journey that began in Philadelphia developed into a robust new capital investment influencing both the economy and daily lives of Americans across the nation. A technology advance the stock market continued to transform, integrating electronic trading systems that have made huge buying and selling stocks faster and more efficient than ever before. Investors no longer had to rely solely on brokers to execute trades. They could now do it from a click of the button from their own homes. Trading opened up the doors for everyday individuals to participate in the stock market, as it all took a computer and some internet access. This area of digitalization, innovation, financial tools, and educational resources have become readily accessible, enabling a new generation of investors to make informed decisions about their portfolios. The 1980s marked a pivotal decade for the stock market as the rise of technology brought about significant changes. The introduction of computerized trading systems allowed for rapid transactions, shifting how traders interacted with the market. As a result, stock prices could fluctuate dramatically in the mere seconds, creating both opportunities and risk for investors. As we explore the dynamic landscape of understanding the factors, the influence of the stock prices will empower investors to navigate the markets more efficiently. The rich history of the US stock market emphasizes the importance of knowledge and awareness in investment strategies. Guys, I want to wish you happy investing.